Welcome to a new update. Today it's macroeconomics update. As I mentioned before, on the Tuesday update, we're going to discuss the US debt ceiling. We're going to focus on what it could be doing for Bitcoin. And we're going to focus on what the Fed will be doing, in a sense that it's a pivotal moment that's going to take place. Beginning of June, we've got approximately 2 weeks until he potentially pauses the hiking process or continues. Either way, it's going to move markets, which means that we can have a look at the DXY, we can have a look at the indices, and we're going to look at Bitcoin, of course. And on Saturday, we're going to do an altcoin update, so make sure to hit the like button and subscribe to this YouTube channel. Also, as I've been briefly mentioning, I'm not providing too much of content now because we've got a lot of things taking place at this point. Next week, we're going to rebrand the entire company. We're going to launch a new website. We're going to also shoot in the coming 3 days. That's why I'm a little bit shiny. We're going to have a shooting days actually for the course. The pilot is finished, which is great. And the course itself takes 3 days of shooting, then multiple weeks of editing and adding visuals. But then we're getting there with the first course, which will be launched next month. So if you want to win one of those courses, make sure to use the whitelist and put your name on there. Also, make sure to join the public Discord where you can have a trade ID every 2 weeks, where you can find a beautiful community where you can ask me everything you want. So yeah, it's a lovely community and we're slowly building it. Today we're discussing the debt ceiling, and on Tuesday I've been discussing the debt ceiling as well, just briefly with the latest news, as the debt ceiling is getting a very important topic, and I'm going to discuss what it actually is and why it's getting into a very important topic nowadays and why it could be impacting the Bitcoin markets as well. So the US debt ceiling is a legislative limit on the amount of national debt that the US government can accumulate, and it's put priced quite nicely. In a way, it is essentially a cap of the total amount of money that the US government is allowed to borrow as its debt to fund its operations and meet its financial obligations. The debt ceiling, and that's why it's an issue right now, must be periodically raised by the Congress in order to avoid a potential default in the US government debt. And that is why it's getting so tricky right now, is that they cannot agree on a new level where they want to put the entire debt, which means that at this point the US debt, and you can see the visual, is 31 trillion. 31 trillion is a ton of money, because approximately a year of 8 ago the debt ceiling was 15 trillion. So it's getting quite steep and it starts to accelerate even more, which ultimately will end up in a bubble, and the debt levels need to burst in some way, that we're going to get deflation, and then all the money just goes away out of the system, or the US goes into default status, and that might be the case right now. So that's why it's an important topic. But they are not agreeing. I think it's between 43 to 48 trillion that some want to raise it to, but they have to focus on it quite soon, and we'll discuss that in a little bit. Now, when we're looking at the debt ceiling, we've got a few moments that it's important to keep an eye on. 1917 is when they started with this debt ceiling system, and there have been some occasions that were influential when you are talking about the debt ceiling level. First of all, 1962 March, the debt ceiling was reached for the first time, so the Congress raised it. August 1987, the debt ceiling was reached again, leading to a temporary suspension of certain government securities to avoid breaching the limit. So once we get there, government stops until there is a new agreement, and then we move on. May 1996, the debt ceiling was reached again, causing the Treasury Department to implement extraordinary measures to manage the government's finances until the debt limit was raised. And the recent ones, October 2013, the debt ceiling was reached, leading to a government shutdown as Congress debated raising the limit, same as now. Eventually, an agreement was reached to suspend the debt ceiling until February 2014. Which means that if you look at the chart, prior to the actual event, the markets were moving downwards. And once we've got the actual agreement, you see that the markets are bouncing back up. So there is relief. But if you think about it, if you're raising the debt levels, which I mentioned on Tuesday as well, raising your debt ceiling is not allowed for anyone except for the US government. So if you raise the debt ceiling, it's making your own economy actually weaker. And then it's quite weird to see that the markets are responding in a positive way. But hey, that's the markets at this point. Another one is November 2015, which is a hand in hand with the previous one. Its debt ceiling was suspended in 2014, but it was reinstated in November 2015, and the Treasury Department employed extraordinary measures to continue funding the government until the debt ceiling was raised in November 2015. It's important to note that the debt ceiling has been raised numerous times, and the specific dates when this debt ceiling is reached can vary depending on various factors, including government spending, tax revenue, and economic conditions. About the economic conditions were worse in 2016 and 2015, or became worse in 2016 as growth has slowed down, which was not a recession, but we were quite close to it, which is the same right now too. Then, we've also known that the federal funds rate and the Fed has been raising the interest rates hikes by the most aggressive since 1994. So the question is that going to impact the market or the debt ceiling? Directly it's not the case, but it can be the case indirectly. The federal funds rate is the interest rate at which banks lend reserve balances to each other overnight to meet their reserve requirements. So the Federal Reserve uses the federal funds rate for monetary policy and to strengthen or weaken the economy. So changes in the federal funds rate can affect borrowing costs, consumer spending, business investment, and inflation. The debt ceiling is, on the other hand, a different one, which is being used to actually meet obligations for the US government. So it cannot directly impact the debt ceiling, but it could be indirectly impacting the debt ceiling through the fact that tax revenues are going to slow down if the economy gets weaker, which is the case when you increase the federal funds rate. And that is exactly what we have right now. Right now, the date of the debt ceiling is getting closer and closer and closer because after 2021, we've had a pretty strong tax revenue season as well, and the economy is slowing down fast, which means that the debt ceiling is getting there as the income for the US government is slowing down. In that way, the debt ceiling is getting more and more of an important topic. So how could it impact the price action of Bitcoin? That's what we're going to discuss when we move to the charts. So when we talk about the US debt ceiling, the first thing we have to do is that we are looking at the dollar currency index. The dollar currency index is currently showing a slight bounce. So what do we see? We did see this massive run showing strength on the DXY in the past year, which has been an impact on risk on assets. Then we've had this correction. We've got this retest of the low again. And ultimately we are having a slight bounce. But if you look at this from a price action perspective, I think we're just having a bounce into a relief rally, which means that most likely we're going to fall down again, especially if the debt ceiling debate is going to be more intense and there is no conclusion on whether they have agreed. And even though if they agree and raise the debt ceiling, I would assume that you expect the dollar to go down because it becomes weaker over time. But hey, that's just me. I think that if we get a relief rally when it comes to an agreement, most likely risk on assets will start to do well. But at least at this point, we can see a case where the markets are showing a bounce on the DXY, resulting into the risk on assets not doing well. So if we get closer, especially with the Fed coming up too, I think the DXY will have some continuation on the trend. This means that we could be having a rally all the way towards the area of 104. I don't believe that you want to see it break beneath here, so at least we can have some momentum, then have the Fed meeting, have the debt ceiling topics being discussed, and if there's no conclusion, if there is most likely a conclusion, I think it's going to be impacting that we're going to continue the falling downwards. If the DXY breaks above here, it's going to impact the risk on assets in a negative way. Talking about safe havens, we've got gold at this point, which initially has been breaking the recent highs, right? It has been sweeping it there. Usually what you get is that we have some more consolidation taking place, which means that you're looking at some levels lower, which means that you're looking at a case of a retest on lower grounds before we can start breaking out at a later point. But at least at this point, I think based on this fact, we are looking for some more consolidation, which means we've got a high, we've got a rejection, we've got a downwards fall. So it's same with gold. If gold is not able to break through the area here at 2K, I think 2K to 2020, this block here, if we can't clearly break through it, I think we're gonna fall south, which means that the DXY has some more momentum and then starts to fall when the depth seeding starts to kick in. The indices continuing to do well. The strange outlier here, we still continue to break upwards, which means that even if there is going to be a case of a depth seeding, most likely we have a downwards fall afterwards. So I think we are going to sweep this high, most likely are going to get into this area, and then we can start the reverse, which makes this a fake bear market, or this makes a bear market relief rally. So I think overall, if there is going to be relief in the sense that there's an agreement, most likely we continue, and then somewhere later in the year we're going to have an expectation of the recession kicking in, which is going to most likely be worse than expected, and then we can see the markets falling down. Then we've also got the yields. Yields have started to run up, so anything here is going to be wrong. The dollar goes up, the yields go up, and the Nasdaq goes up, so any of the two have to be impacted, which means that I think that the yields are still consolidating here. Currently expecting a continuation, which is mostly inflation based, but I think that the Fed can't continue, and therefore we have to adjust this quite soon. Now the question, as we have been discussing the DXY, which is still making a slight bounce here, and most likely will continue to do making this bounce, which means that we're going to have some more impact on the markets. What is going to be the impact on the Bitcoin price action at this point? I've mentioned the higher time frame case for Bitcoin, which means that I think that we're looking at a case of finding ourselves a bottom on the lower regions. We're just creating a higher low, because if you're looking at the higher time frames, we are looking at a case of creating higher highs. Hence, we are looking at higher lows through which we can continue this movement. I think that if the DXY starts to show weakness, and if the Nasdaq starts to turn around in a negative way, if gold starts to bounce up, I think Bitcoin will move along. But that's just a very suspective case at this point. If there is some real panic in the markets, of course, Nasdaq goes down, Bitcoin goes down, etc. But I think that if this is going to be related to the depth seeding, the DXY will not be doing really well, which means that Bitcoin will start to do quite well. But that's still a question at this point. At this point, we're looking at a higher low that we need to make when it comes to Bitcoin, and the thesis hasn't been changing at all. What we're looking at is a case that we need to reclaim 27.2 to 27.4. If that is done, I'm looking at longs for new highs. If we are not able to do so and we continue to chop, most likely we're going to have a case like this in which we continue to fall to 25k and create a bullish divergence on the lower time frames. Alright, so it needs to be reclaiming 27.2 to 27.5, and then we are able to continue the movement here, and then we are looking for longs. Overall, my higher time frame thesis didn't change. I think that everything between 23 to 25 is still a great opportunity to buy. We are still waiting for the price action to move. So these are just the two scenarios. While we're looking at the total market cap is already into an area of interest, as we are looking at a higher low still here. We can still move a little bit more south, which means that we can still have to drop towards, 1 trillion. But when we are looking at the EMAs and the MAs, it is down approximately 5% more, and then we're getting to it. So then we need to bounce and need to hold. Same goes for Bitcoin. We can still drop a few percent more, but you clearly don't want to have Bitcoin drop beneath these two MAs. So that's it. I think that the depth seeding has been explained. I think the impact will be quite clear. I think that the DXY will start to continue falling down. Next week we will discuss it again. Make sure to check out the outro. I hope you have been enjoying this small update on the US debt ceiling. I'll be back on Saturday when it comes to the altcoin update. Make sure to hit the subscribe button, like these YouTube updates, and also make sure to join the public Discord. I'll see you again on Saturday. Ciao.